Back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers. So please be careful. Don't get yourself scammed. If you want to follow me when I'm not on YouTube, do me a big favor. Get down in the description box and click on that Richard Fain Millionaire Mentor Instagram link and give me a follow on Instagram and then send me a DM to let me know you're rocking with me so I can say thank you. Many of you guys know I had another Instagram page, which was Richard Fain 28. And that page was disabled back in December of 2023. It had over 90,000 followers. So every day on my YouTube videos and on my live streams, I'm just reminding everybody who is following me over there on that old page to get yourself over to the new page, which is, like I said, down in the description box is the link for the new Instagram page. So if you still want to follow me on Instagram, make sure you make the switch over from the old page to the new page, and you'll find that link down in the description box of the video, like I just mentioned. Got a lot of stuff to cover, guys, and I'm gonna be on here about an hour. So not gonna be my normal 90 minutes like I normally am. So I got a lot to cram in to this short period of time. So do me a big favor, also get down in the description box, second link, which is the website, the brand new website. It's been up about 2 months. And a lot of you guys, over 175,000 of you guys have already went over to the website to check it out over the last 2 months. So thank you very much. All organic, me just talking about the website here on the YouTube channel. So thank you so much for the people that have, worked their way over to the website and decided to check it out. So thank you, I appreciate it. Also, a big thank you to all the folks that have made an investment in themselves and purchased some of the digital products. Got some great digital products over there for financial wealth building. So if you want to build your wealth, go to the website, check out those financial wealth building digital products we have. I handpicked all of them. So rest assured, I read through them. I know exactly what's in all of those financial digital products. So please take a look at those. They will help you get to your pot of gold at the end of the rainbow. And then obviously I got the mentorship club. You can join through the website, right? If you want to be mentored by me, the only way to be mentored by me, guys, is through the website, and you have to join the private mentorship club. For those of you that don't want to be mentored by me, don't worry about it. Just keep watching the videos and get your nuggets, and you can figure it out on your own. But for those of you that need some help figuring this thing out when it comes to getting to your pot of gold at the end of the rainbow, and you want me to be your mentor, then that's the way you get it, right? There's no other way on the internet to have me mentor you other than through my website and through the private mentorship club. So if you want me to mentor you and you want to be around another 600 folks that are already in the mentorship group that are helping one another, giving, great financial nuggets to people, because we've got to understand we all have different degrees of financial literacy, right? So some people are brand new at this. Some people they've been doing it for a long time, and they're over there in the mentorship group as well. So you're not only going to be mentored by me, but there are other people over there that can also lend some expertise around certain things when it comes to building wealth. But ultimately, it's my mentorship group, so I'm responsible for it. So I'm watching it, making sure everybody is doing what they need to be doing over there. And the folks over there know I'm a big believer in we're not experts. We're just people out here trying to build wealth. We're not trying to tell people what to do. We're offering suggestions. We're telling them what we do, and they make the decision what they want to do. I'm a big believer in empowering people to make their own financial decisions, because that's the way it should be. I'm not here to tell you what to do. I'm here to give you information and lend my 30 years of building wealth through the stock market, through real estate, and through businesses. That's it. I'm not here to tell you what to do. I'm not here to say, okay, Jerry, do this. That's not why I'm here. I'm here to give you information. We can talk through that information, but ultimately you make the decision. So if you want to be a part of that group, like I said, go through the website, www.richardfain.net, and join today. Last thing before we jump in is the Moo Brokerage app. You guys know that's my brokerage app of choice that I'm going to be using over the next 10 years to quadruple my net worth. I'm going to be buying paper assets, big boy blue chip paper assets that we're going to talk about a little bit today, and why that's important for me to be able to invest in those assets using the Moo Brokerage app. Ultimately, my Moo Brokerage account. So that link is down in the description box as well. It's actually the first link. So if you're brand new, 18 to 80 years old, and you're trying to figure out a way to increase your net worth, get you a bigger pot of gold at the end of the rainbow, increase your nest egg, then guess what? Hey, why not try Moo and allow them to assist you in buying paper assets? Now, if you do decide to, join Moo and open up the brokerage account through Moo, like I have, then they're going to give you 5 free stocks when you put your first $100 in your brokerage account. They're going to also give you they'll give you 15 free stocks if you decide to put $1,000. Now, these 2 offers, guys, are free, but you have to make the deposits when you open the account, right? You can't open the account and then 6 months later down the road, you put $100 in and you're looking for 5 free stocks. You're not going to get it. The whole point is to incentivize you to open the account, put money in it, and start buying paper assets. That's the whole point of it, right? The free stocks are a byproduct, right? The real key is to have a self-directed brokerage app that you can buy paper assets to build wealth. Now, for those of you that are 18 to 80 and are brand spanking new and don't know much about brokerage accounts, then guess what? I'm going to send you some tutorial videos to help you collapse time frames and learn this app pretty quickly so that you can start buying assets to build your wealth. Again, all you got to do is send me an email through my website and just say, Richard, I've opened my Moo Brokerage account and I'm ready to get those tutorial videos for the Moo Brokerage app and your videos outlining what you're buying through the Moo Brokerage app in order to build your wealth. And I'll send you those videos and the tutorial videos. Well, all right, man, let's dive on into this thing because like I said, I ain't got much time today and we do have to talk about this because I think it's extremely important. You know, guys, for the last 6 months, I've been talking about my wealth transfer blueprint and buying these assets, these paper assets. And I've been talking about how I'm going to use these paper assets to build my wealth. I started off doubling the net worth. Then I said, I'm going to triple it. Now I'm going to quadruple it. But you got to understand this process for me to quadruple my net worth is not an easy process in the stock market because we're going to have times in the stock market where things don't go my way. We're going to have days where stocks just don't do well. My ETFs just don't do well. They don't increase in value. They actually decrease in value. So that's part of the stock market, though. That's part of the cycles of the stock market. So I want to talk to you today about some folks that actually believe there's a major correction coming, a crash, right? A major correction is coming to the stock market. And I want to walk you guys through that because I need you to understand these are cycles in the stock market. The stock market just doesn't go up every day, all day, and it never goes down. It goes down. And the reason I'm telling you this is because a lot of you guys are beginners. Now, I know we got people on here that know what they're doing. They've been invested in the stock market for years, and they understand the ebbs and flows. But a lot of you folks don't because you're brand new. You're brand new. You've never bought stocks. You've never bought ETFs, and you're just starting to get started to try to build your wealth. So you need to understand the other side of the stock market. And again, this is not to scare you. This is just to give you information so you can decide how long you want to stay in the stock market. Nobody says you got to stay in here for 10 years like me. You can stay in here for one day if you want to. Make your money and get out. You can stay in here for a month. Make your money and get out. But you need to understand if you're going to stay in here and continue to invest, it's not just all green days. There are going to be days where it's red, and there may be months when it's red. Right? And that's what we're going to talk about today. You need to understand the complete picture here. Yes, can you make a lot of money? Absolutely, that's a possibility. But there is a possibility that you can lose too, right? There is a possibility. So you need to know both sides. And that's what I'm here to walk you through. One of several of the folks who believe some type of crash is coming. And that just helps us as investors to know other opinions, because that's all it is an opinion. This guy don't have no crystal ball. He can't see into the future, just like you and I can't see into the future. He can look at the history of the stock market and try to predict what may happen in the future. And that's what he's doing. He's looking at data that suggests, hey, if this happens, then this will happen. That's what he's looking at. He can't predict the future just like you and I can. All I can do is hope for the best, right? All I can do is plan for the worst and hope for the best. Plan for the worst, which is a total stock market collapse, would be the worst. So I plan for that, right? I plan for the worst, but expect the best, right? So let's dive into this, and then I'll tell you exactly what I'm going to be doing in order to protect myself from any of this stuff. I'll tell you what I've done historically over the last 30 years to protect myself from all the downturns that I've been through, all the corrections that I've been through, all the crashes that I've been through buying paper assets over the last 30 years. Fair enough? Okay, so it's not gloom and doom. It's not to scare you. It's just to get you to understand, for you new people, to understand the full picture here. You need to know the full picture if you're going to invest in paper assets, right? You need to know the full picture, or at least potentially what could happen and what has happened in the past. We've had corrections. We just had one in 2022, a 20+% correction in 2022. So it can happen. And that's the whole reason we're having this conversation, right? So here's the headline. A stock market correction is coming as rates, inflation, and valuations darken the outlook for investors, strategist says. So these are experts. They're looking at data. They're looking at inflection points. They're looking at rates. They're looking at inflation. They're looking at these high valuations on companies, AKA some may say a high valuation for NVIDIA. That's their opinion, guys. Everybody's entitled to their opinion, right? We are, they are. So let's listen to the opinions, and then we can kind of educate ourselves, and then we can form our own opinion, and then we move forward with our own opinion. Let's get some opinions, and then we form our own opinion. So let's keep moving. Here's what this thing is saying. And let's pay attention to this. The stock market is in for a correction. This is what this strategist is saying, this expert. The stock market is in for a correction as a trio of unfavorable factors will weigh on equity prices. When he's saying equity prices, guys, he's just talking about companies. He's just talking about stocks, right? He's talking about individual stocks, and he's talking about multiple stocks in one investment. And those multiple stocks in one investment would be ETFs, would be index funds, would be mutual funds, right? So he's talking about equities. That's just companies, guys. That's all it is. It's a fancy word for companies. Stock in companies, right? So that's what he's talking about here. He's saying there will be a trio of unfavorable factors that will weigh on equity prices, stock prices, ETF prices, index fund prices, right? According to Sam Scoville, Chief Investment Strategist at CFRA Research. So he's a chief strategist, smart guy, probably got a lot of degrees, probably been on Wall Street for 1,000 years. So let's listen to him. That don't mean we got to agree with him, but we need to listen to him, right? Guy got some letters behind his name. He done been on Wall Street, right? So let's listen to him. The Wall Street veteran, I told y'all he was on Wall Street. The Wall Street veteran pointed to the strong performance of stocks so far this year, with the S&P 500 up 15% in 2024. See, I told y'all that yesterday and the day before that my SPLG is up 15%, which tracks the S&P 500 index. So if you got a S&P 500 ETF and it ain't up 15%, you want to double check that because something ain't right. Because if the index is 15% and it's tracking the index, it should be 15%. If it's not, you need to go double check that ETF that's tracking the S&P 500 because something's off. However, the benchmark index is poised to drop or to dip 5%. So if we're at 5,500 points, he's saying it's poised to drop 5%. Right? So what's that? 250, 300 points, something like that. Right? So is that a big deal? Well, we'll talk about it. For some of y'all, it's a big deal. For me, no big deal at all. Just a blip in the road. I don't even think about that, right? But that's me. It may be a big deal to you, but we'll talk about it. However, the benchmark S&P index is poised to dip 5%, he predicted, thanks to the bearish setup in interest rates, inflation, and stock valuations. Inflation is declining, but it's still above the Federal Reserve's 2% target, leading central bankers to project just one rate cut by the end of the year. So what he's saying is, since inflation is stubborn, it's staying above 2%, which it is. That's a problem. That's going to be a problem for the S&P and other stocks, right? That's what he's basically saying here, right? Plus, what's happening? Since inflation is being sticky, now the Fed went from 3 rate cuts in 24 down to 1. That's a problem, he's saying, right? So let's keep moving. This is why he's coming up with this prediction, right? Higher rates have triggered the longest ever inversion of the 2 to 10-year Treasury yield curve, the bond market's famous gauge of a coming recession. The indicator, which flashes when the 2-year yield surpasses the 10-year yield, has been a reliable recession signal throughout history, and economists have said that this time likely won't be different. So basically what he's saying, when you look at the 2-year Treasury, interest rate, the interest rate on the 2-year Treasury, and then you look at the interest rate on the 10-year Treasury. When the interest rate on the 2-year Treasury is higher than the interest rate on the 10-year Treasury, that could signal a recession. Guys, I ain't smart enough to figure all that out. I'm just gonna, okay, this guy's know what he's talking about. Do I care anything about that? No, I don't. Now you may. The only reason I'm giving it to you is because this is why he's coming up with his prediction. Do I care about what the U.S. Treasury is, 2-year, 10-year? I don't care nothing about that. I don't care anything about that. Richard, why don't you care about that? Because I've been in this thing for 30 years. I've been through every downturn. And guess what? Every downturn is followed by what? Every downturn is followed by what? A bigger and better upturn. And the upturns last longer than the downturns. Go check it out in history, guys. I ain't got to tell you no lie. So all this 2-year Treasury, this and the 2-year, the 10, who cares about all that? As a regular regular person, all I care about is, has anything materially changed about that company that I'm putting my money in? If it hasn't, it'll come back. That's all I care about. I don't care about no 2-year Treasury. I don't care about no 10-year Treasury. All I care about is those companies that I'm putting my money in. Is anything wrong with them? Or is this just an overall market correction? Is there fundamentally something wrong with the S&P 500 and those 500 companies in it? Is there a fundamental problem with the Mag 7? Is there a fundamental problem with NVIDIA? That's all I care about. Now, some people could say, well, golly, I mean, shoot, the valuation is just overinflated. But that's your opinion. Don't nobody care. I mean, listen, man, have your opinion. You can say what you want to say. All I care about is the company. See, this is what I've done over 30 years, guys. I don't care about any of this. That's way above my pay grade. I don't care about no 2-year Treasury. I don't care about no 10-year Treasury. All I care about is, what does the history say about the S&P 500 over the last 90 years? It multiplies money if I stay in it long enough. That's what history says. So whatever he want to say about this little recession, fine. If it happens, great. But it still doesn't neglect the fact or negate the fact that the S&P 500 over 90 years on average, has delivered a 7 to 10% rate of return. Through all of the 2-year treasury, go higher than the 10-year treasury, don't matter. 90 years worth of data says I'm gonna get me a 7 to 10% return on that S&P 500 over a period of time. The last 10 years, it's been 12%. So I don't care about the US Treasury, but I get it because he's a strategist. He's talking to people who have billions and billions of dollars that they're investing. The average person ain't gonna understand nothing this dude's saying. I don't even understand it. What I can't understand is what my history tells me over the last 30 years, what happened to my money when I put it in the stock market. It multiplied it. So let's keep moving. Let's keep moving. The indicator which flashes when the 2-year yield surpasses the 10-year yield has been a reliable recession signal. Great. If a recession happens, it happens. But here's the good news. It ends. That's the good news. It ain't gonna last long. Y'all go out on Google and figure out how long a recession normally lasts. Please do that. It ain't gonna last long. Why ain't it gonna last long? Because our country is dependent upon our financial system to pump money into our economy. And the only way we get money pumped into the economy is through companies. And our government is not gonna sit around and watch us stay in a recession too long. They're gonna artificially pump money into the economy, which they did the pandemic, right? They pump money in. They're gonna do it again. They're gonna do it again. And guess what else the Fed gonna do? They're gonna take those good old interest rates from 5.5% down to 0. And guess what that's gonna do? Stimulate the economy. So I don't worry about no recession, guys. Because one thing I know about the United States, it's about dollars. It's about multiplying money. That's what it's about. And they're gonna do everything they can. I don't care who's sitting in that White House seat. I promise you, if we go into a recession, Fed gonna bring them interest rates to 0. And when they bring them to 0, it's gonna do what? Introduce a very, 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 very cheap supply of money to our economy that people will borrow. And it will stimulate the economy, guys. They did it during the pandemic. When they shut the whole country down, how do you think we survived? Stimulus in the form of free checks and 0 interest rates. So he can say what he want to say about a recession, it won't last. So that's why for me, over my 30 years of investing, I don't worry about this crap. What I worry about is, are the companies I'm putting my money in good companies and solid companies that have a history of bouncing back through recessions and going to all-time highs? That's what I hang my hat on. I don't worry about all this mumbo jumbo because I know what the government gonna do. They're gonna go to 0 on them interest rates and they're gonna artificially pump money into the economy until it gets back where it needs to get to. And a lot of y'all might agree or disagree with that. Oh, golly, they're pumping too much money. Pump it. Pump it. If I go to 0 on all my investments or you pump money in the economy, pump it. We'll figure it out, just like we're figuring it out now. Yep, we're going to have inflation again. Who cares? We had it before. It was 9% in June of 2022, guys. What is it now? It's about 3%. That's headline. And when you look at PCE, it's lower than that. PCE is what, 2.8? So they know how to bring inflation down and they know how to run it up. That's part of our economy. So all these people out here want to be these so-called experts and think they know everything. They don't know crap. That's what I say. I've been in this thing for 30 years. I done been through a lot of them. And every time the same thing happens, guys. 2008 Great Recession. What happened? That was supposed to just obliterate us. Oh, we'll never come back. We'll never survive it. Man, we got an S&P 500 at 5,500 points. We got a Dow that done hit 40,000 points. We got a NASDAQ that hadn't hit all-time highs. But we were never supposed to come back from it. But we did, which we will again. So my point is, if you're in this thing for the right reasons and you know what you're trying to accomplish in paper assets, a recession is not a bad thing for you, especially if you're long-term, because you're going to be able to buy assets at a heavy, heavy discount. And if they're great companies like I invest in, they come back. And when you bought them all at that great discount, they go back to a premium. What does that mean in between? I'm building a lot of net worth. So I understand what this guy is saying. Do I care? No. But it's important to understand the other side of the equation. But it's not going to stop me from putting money in the stock market. If we get a 20% correction, I'm just going to buy more. Right? See, because I've been through this. I know it don't last. Some of you've been through it, but you didn't really have any money in the stock market, so you didn't have a dog in the fight, so you wasn't paying no attention to it. You were worried about your paycheck. You was worried about, hey man, y'all messing with my paycheck, this is how I take care of myself. I was worried about my paycheck too, but I also had assets multiplying money because I know I didn't want to work for somebody for the rest of my life. So I had money, I had dogs in both fights, the paycheck fight, and I had a dog in the stock market multiplying my money fight, right? So all I'm saying is we just want to know what could potentially happen. Don't let that scare us. Don't let that take us off course, but you just need to know it could happen. And that's why I'm having this discussion with you. Stock valuations are also high by historical standards. See, I love that. Historical standards, right? Let's keep reading, which hints at future downside. The S&P is priced at a 32% premium compared to average price to earnings ratio over the last 20 years, Stovall noted. Tech stocks, which have dominated the market in recent years, are trading at a 68% premium. I think we're really stretched, and we got to see some upward revisions to earnings estimates. I think in order to justify that, Stovall said in a recent interview with CNBC. Well, listen, guys, if NVIDIA comes out and go triple digits, if they go 262% of their year over year revenue, okay, well, did they just put that number in there and didn't really do it? This is the point I don't understand. They did that. So how could that be an evaluation? It's too much. Listen, man. Listen, it's about companies. It's about companies, right? It's about companies. This whole financial system, guys, that we enjoy, this whole economy that we enjoy is all driven by companies. It's driven by products and services, companies and consumers. The whole thing is driven by companies and consumers, right? Right? Without consumers, we got no companies. Without companies, we got no consumers. So I'm not going to argue about evaluation because that's above my pay grade. I don't really care. All I care about is the stock price keeps moving up, right? All I care about is you pay me my dividend so I can reinvest it to build more wealth. You can argue the valuation all you want to. I don't care about that. What I care about is if you say you're going to do a thing, do a thing. And that's all I care about when my companies, if the S&P 500 has doubled itself over the last 10 years, who is this guy to say it can't double itself again over the next 10 years? That's the way I look at it. I'm on history side too. Just like he's quoting history, I'm quoting history. 2014 to 2024, the S&P 500 more than doubled. That's history too. And guess what? Just like you're using history to say something can be repeated again, I'm using history saying, yeah, they can double again. That's the way I look at it. I told y'all guys, I'm not a pessimist. I'm an optimist, but I love hearing other people's argument for it. Don't mean I'm gonna agree with it. It's not gonna change my strategy. I'm reading this and telling you this so that you understand what else is out there from the experts. So you're not blindsided. Oh my God, what do they mean? Why is my stocks going down? This is why. That's what the stock market does. Just like NVIDIA started yesterday, a slide, and this morning it continued. But next week it could go up 50 points. It could go up $50 a share next week. That's how it works sometimes, guys. But if we have a plan and we know what we're trying to accomplish, you know when to get in and get out of these stocks. That's all I'm saying. If you're up today, right now, you're doing well and you're winning and you made money and you have no reason to stay in this thing longer, get out. It's that simple. I've been telling you guys that over the last few days because I know I got a lot of new people in this thing. If you've made the money you want to make, don't get greedy, get out. It's that simple, guys. There's nobody here says you got to stay in the stock market and see your money go down if that's not what you're built for. If you've made the money you want to make, get out before the crash. That's the reason I'm telling you all of this. So if you're not wanting to go through one of these, potentially, get out. Take your money, go put it in a CD at the bank. And you ain't got to worry about no crash. That's all you got to do. Because I want it crystal clear. I'm not here to try to tell somebody it's all going to be peaches and cream. It's not. It's going to be mud at times. You're going to feel like you're in the mud, dirty mud at times. But if you're built for it and you understand these cycles, you know on the other side of that mud is peaches and creams. So you gotta get through the mud. You gotta walk through the mud, get all dirty, get on the other side of the mud, rinse yourself off, and now you got peaches and cream. That's how this thing works. So if you ain't want to go through this mud, get yourself out of here. Make your money, get out. Go put it in a CD at the bank, live the rest of your life, and you're in good shape. But if you want the reward, you're going to have to go through the risk to get to this big reward. Like I said last night in my live stream, you got little risk, little reward over here. That's what your CDs are. That's your U.S. Treasuries. That's your money market accounts. Little risk, little reward. If you want big reward, you got to take big risks. And that's what the stock market is. It is a risk, guys, but it will deliver a big reward if you're willing to buy the right assets and take on the risk. There potentially could be a big reward. So let's keep moving. So right now he's saying tech companies are overvaluated. They're trading at a 68% premium. The S&P is overvalued. It's trading at a 32% premium. So all of this overvalued. So hey, this can't last. Somebody's going to poke a needle in the balloon and let all the air out. That's basically what he's saying. We got a big old balloon in individual stock companies. We got a big old balloon in the S&P. And at some point, somebody going to put a needle in it and all the air going to come out. That's basically what he's saying, in my opinion. I think we're really stretched, and we got to see some upward revisions to earnings estimates. But what is an earnings estimate? An earnings estimate is somebody saying we're going to do something. This is what we're going to do. But if they do it, how in the world, how could you fault them? If a company says we're going to go triple digit everything and they go triple digit everything, how can that be you see what I'm saying? So I don't know, man. We'll keep going. I think in order to justify that, Stovall said in a recent interview with CNBC, stocks could see their first crack in the ice in the tech sector, he added, pointing to lofty valuations among mega cap tech stocks. Let's go back to 2022. I keep going back to that because that's the most recent downturn, right? Let's go back to 2022. Prior to 2022, Facebook, Meta, had meteoric growth since they started this thing, right? Hit a little dip during the pandemic, right? Hit a little dip, bounced back, hit a big dip in 22. Stock went under $100 a share. Facebook now, a platform that has 2.5 billion people on the platform now. So prior to the pandemic, doing well, pandemic hits, take a dip, come out of the pandemic in 21, get back on the solid ground. 22 rolls around, takes a real dip. Stock price goes under $100 a share. 2 years later, stock price is almost $500 a share. So all through that, guys, here's what I want you to understand. All through those ups and downs, did anything change with Facebook? It continued to do what? Add new users. All through that. Facebook never changed. Facebook was still profitable. Zuckerberg is one of the richest men in the world, one of the richest people in the world. He in the top 10, Zuckerberg. So help me out here. Help me out. If nothing changed with Facebook over that, all of the ups and downs, guess who got rich other than Zuckerberg? The people who just stayed in the stock and kept buying. They got rich. Now, why would somebody stay in that stock and keep buying to get rich? Because they understood one fundamental thing. There was nothing that changed with Facebook. Facebook was still Facebook. They still was pumping out, they were still adding them users. They were still generating revenue through ad revenue. Ain't nothing changed with Facebook other than they just kept going up. So sometimes the stock goes down, guys, but it doesn't mean the company is a bad company. Case in point is Facebook. They were under $100 a share, guys. Now, 2 years later, they're dang on near $500 a share. So my point is this: if you're doing it for the right reason, you got the right companies, you got the right ETFs, I don't care if we have a correction, they come back. Especially if there's nothing fundamentally wrong with the company. There was never anything fundamentally wrong with Facebook. Through all the ups and downs over the last, you can say 5 years, nothing. Right? So even if Facebook trading at, let's say trading at $4.75 a share, if it goes down to $1.75 a share next year, see, I won't jump ship. I'm gonna buy more because I know it'll go back. They got 2.5 billion people on the platform, guys. That's a lot of ad revenue that companies want to pay to get to them 2.5 billion. A lot of ad revenue. So all I'm trying to tell you is you better figure out what you got going. And I know they love to throw around this term, big tech companies, oh, the Mag 7, oh, they're going to disintegrate. Guys, no, they're not. They're not going to go nowhere. If the S&P is going to be successful, if our financial system is going to be successful, tech is going to be a part of it. Now, that doesn't mean tech won't have a downturn. That won't mean the energy sector won't have a downturn. It won't mean the real estate sector won't have a downturn. It doesn't mean the healthcare sector won't. We got 11, 12 sectors, guys. All of them could have a downturn at once. But that don't mean they don't come back stronger. History says they do. Or we wouldn't even be talking about the stock market right now if history wasn't correct. We would have been done in 1929 when this thing crashed. We'd have never came back. We'd have been done, what, 48, I think? 38 or 48, we'd have been done. We'd have never came back. .com, we'd have never came back. Great financial recession in 2008, they said we'd never come back from that. It's done. Our financial system will never be the same. No, it wasn't the same, it's better. It wasn't the same, it's better. So all of this gloom and doom crap that these guys talk about, they're paid to do this. And guess what? A lot of these people talk about this stuff, not that it won't happen, because it can happen and it will happen. I'm telling you it will happen. But I'm telling you, if you're in this thing for the right reasons and you understand your plan and you know the companies that you're invested in, you're good. You're good. And if you don't believe you're built for this and you want to go through one of these downturns, here's my advice. Sell it all today and go put it in a CD at your bank. And you're good. You ain't got to never worry about this. Again, a day in your life. You ain't got to worry about no fluctuations in your principal. But little risk, little reward. You just be prepared for that. If you okay with the little risk and little reward, go put it in your CD. Ain't nothing wrong with that, guys. But don't complain if you put your money in the stock market and the thing go down and you start complaining. No, don't complain, because you can get out today. You can just cash it all in today. Take your gains, put them in your CD at your bank, and then you're good. But if you decide to stay in this thing, then understand what potentially could happen at any time. So I was telling people about NVIDIA earlier this week. If y'all go back and look at my videos, my live streams from like Monday and Tuesday, even last week, I was telling folks, listen, guys, you're up on NVIDIA. Take your profits and get out if you're not built for this. And then all of a sudden you get a slide yesterday. People are like, oh my God, what's going on? I tried to tell you, this is what happens in the stock market. What do you think it's going to be green every day? No. I mean, NVIDIA started at $140 a share yesterday. And the last time I checked this morning, it was like 128. But next week, it could be 165. That's the way it works, man. So if you're not built for it, Get your money and go put it in CDs. Your principal is protected. You get a little bit of interest, and you can live the rest of your life in peace. And you ain't got to worry about the mental financial warfare you're going to go through by investing in stocks. But if you're going to invest in stocks and you understand the risk, but you want the reward, then let's keep moving, right? Let's just keep moving. Stocks could see their first crack in the ice in the tech sector, he added, pointing to lofty valuations among mega cap tech stocks. It's only been tech that's been outperforming the market. Well, that's how I get rich. I want to find investments that outperform the market, guys. That's how I multiply my money exponentially. I want to outperform the market. So yeah, that's why I'm heavy tech. That's why I'm in the Mag 7. That's why I'm buying NVIDIA individually. That's why I'm in the S&P. That's why I'm in information technology, because I want to outperform the market. That's how I get rich. I get rich by outperforming the market. Now, can I just perform where the market is? Yeah, you can. I choose not to. I know the risk where I'm 100% in equities, but I got a 10-year window. And there's nowhere in the history of the stock market that there's been a 10-year block of time where it's performed at a negative. Nowhere in history. Not a 10-year consecutive 10-year block. 1, 2, 3 years, yes, but not a 10-year consecutive block. So even if the thing crashed tomorrow, I got 10 years before I need this money to take care of me. Some of you are not in that same position. Some of you have built your wealth and you want to protect that principal. You don't want it being fluctuating, and that's okay, because you need your assets to generate income right now to take care of you. That's okay. That's why I'm saying get out. Me, I don't need my assets to take care of me right now. So I don't mind if something happens and it goes down to 20% temporarily. All I'm going to do is reach into my cash reserves and buy some more and wait till it go back up again, which history says it will. Right? So that's my strategy. I got a 10-year window, so I can afford to have a couple downturns along the way over 10 years, because I don't need my assets right now to generate any income to take care of me. I got income I'm generating on my own through my own efforts. So long as I can generate income through my efforts, I can just keep my stuff in equities, right? Some of you may not be able to do that. So it's only been tech that's been outperforming the market. I sort of feel this is a jumbo jet that's flying on one engine, and you wonder how long it will stay aloft, he warned. Right? So here's the thing, man. I get it. I get what he's saying. But history tells me I don't know about the jumbo jet with one engine. I don't know about all that. History tells me the market comes out stronger the next time. After every downturn, the market has always came back stronger. Please go through history and tell me one time we've had a major correction and we didn't come back bigger, stronger, faster. Please, anybody tell me one time we didn't come back bigger, stronger, faster, better. We have every time. Every time. Why? Companies, consumers. Companies and consumers. That's why. Companies produce stuff, we buy it. And as long as that happens for the rest of history, they're going to always come back stronger. I'm just telling you. It boils down to companies and consumers, guys. That's all it boils down to. Companies and consumers. And the 1%. And guess where the 1% got most of their wealth? In companies. In real estate. In the stock market. That's where they keep it, or that's where they create it. These folks ain't finna let that go. No. That's why in the pandemic, guess what happened? Start pumping that money into the economy, baby. Yep, we knew we was going to pay for it through inflation, but we didn't care. We had to save this. Start pumping that money in. Brought them interest rates to zero. Zero. I could go get a loan for 2% for a car, basically free money. And that's when I took out loans. When I bought cars back then, I just took out loans because I could get a 2%. I could take the 2% on a 100K loan and then take the 100K in the savings account and put it in growth. And get 10, 15% on the growth over time while I'm paying 2% for the loan. Now you can't do that because rates are high. Now you got to get a 7.5% loan. Can't do it no more. But what happens is when we do go into a recession, they know that. So what do? Go to zero on the interest rates. So now I can borrow money from banks. I can borrow money to invest back into the economy, to improve it. And that's what happens. I can borrow money cheap. Companies can borrow money cheap. And we recycle money back into the economy. Plus, they artificially pump money into the economy as well. And a lot of people get mad at that. I'm like, well, what do you want them to do? Nothing? And let the country just go to zero? Is that what you want them to do? I'm tired of them pumping money in the economy. What do you want them to do? People to go around starving, losing everything, collapse the whole financial system. Some of y'all something else, man. What do you want these people to do? Just allow the whole economy to just flatline? Whoa, golly, we got this, who cares? They're going to kick that debt down the road. They ain't never going to pay off that debt. But China ain't going to pay off theirs either. Y'all act like we the only country with debt. China got debt too. All the rest of them got debt too. Guys, that's part of the financial system, right? No, they ain't gonna never pay it off. In 30 years, it'll probably be 100 trillion. They're never gonna pay it off. Why? Because they can just create money. But every other country does the same thing, guys. Y'all act like the United States is the only country out here with a pocket full of debt. No, everybody got it. Because that's how the financial systems work around this world. It's been that way for thousands and thousands and thousands and thousands of years. And it will be that way for 1,000 or 10 more thousand years. That's the way it works, right? Other forecasters have warned of limited upside to the market as stocks, particularly tech stocks, continue to climb higher. According to one valuation metric, the stock market looks to be the most overvalued since 1929. I just love these just random things they throw out, which could pave the way to a deep, steep correction. Elite investors John Hussman warned. Now, see, these will be the same guys, and this is guys which y'all got to understand. And again, I'm not saying that we won't have a correction, because we will. I've told y'all that. We will have a correction. But you got to also understand this, guys. You got two ways to make money in the stock market, right? In my opinion. You got the traditional way to make it, where you bet on companies. You put your money in those companies go up in value, and you make money. That's the traditional way. And then you got this other way where you bet against companies. So you can bet for the company, where I put my money in the company. I'm betting that you will grow. NVIDIA, I'm betting that you will 3X. I'm betting Amazon, you'll 3X. I'm betting Walmart, you'll 3X. That's betting on the company. And then you got guys and gals that bet against the company. They bet against the stock market. They make money that way. So you do see, the thing is when you hear these so-called experts, you don't know which side of the equation they're on. They could be telling you all of this just because they're betting against the stock market. And how do you bet? How do you win when you're betting against the stock market? You panic people. You panic them. You make them panic sell. You make the whole thing just fall for a little bit of time. And they know this. It ain't gonna fall forever. They just need it to fall just enough so they can get billions out of it. By shorting the stock market, shorten stocks, or whatever they do to bet against the stock market, to bet against NVIDIA, to bet against Walmart. So you got people that bet against the stock market, and you got people that bet for the stock market. So when you're listening to these people, you got to figure out and ask yourself, what side of that equation could they be on? Just saying, right? Just saying, keep that in consideration. But here's what I tell you. Been doing this for 30 years, not an expert, not a financial advisor, just a regular guy. Been doing this for 30 years, and my rule of thumb is find great companies, find great ETFs with a historical track record of making money, and stay in them long term. That's all I've done. And I've been fine. And I've been through 3 or 4 of these downturns, these so-called it'll never recover downturns. I've been through like 4 of them. It'll never recover. They'll never. Facebook will never recover. They're under $100 a share. They'll never recover. It'll never be the same Facebook. Yeah, 2 years later, they're damn near $500 a share. But guess what? Whoever was betting against Facebook, they made a lot of money. Yes, they did. They made a lot of money betting against Facebook. Same thing with Tesla. All of those people was gloom and doom about Tesla in 2022. They were betting against Tesla. There was about $15 billion made shorting Tesla stock in just 2022. 15 billion. So you got to understand when you listen to these folks, man, you better be asking yourself what side of the equation are they on. They could be betting against the stock market and their propaganda. Now, I'm not saying that the stock market won't correct itself. It will. I've already told you that. Now, when will it correct itself? I have no clue. But I'm in this thing for 10 years, so it doesn't matter to me. If it corrects tomorrow, I ain't selling my NVIDIA. I'm going to buy more. I don't care if NVIDIA go down to $60 a share. I ain't selling it. I'm buying more because I know in a year, 2, 3, I'm going to get rich. If I can buy NVIDIA at $60 a share post-split, you think I'm not going to double down and buy more of that? Man, you got to be crazy. Got to be crazy. So, hey, whatever happens in the stock market, guys, have your plan together. Be prepared. If you're not built for this, sell it all right now and get yourself back into CDs. Put it back in your money market account. Because if you ain't built for this stuff, man, get out. Please. I'm begging you. If you ain't built for it, get yourself out of here. If you done made you a little profit and you ain't built for it, get out. This is only for people that understand the correlation between high reward, high risk. If you understand that, you're good. If you don't understand that, you cannot wrap your brain around that, get out of it. Because it ain't going to be pretty for you. It's going to be a lot of stress if you're not built for this. And I'm not trying to scare you. I'm just being honest with you because I don't want nobody on my YouTube channel saying that, oh, well, you ain't tell me. No, I'm telling you now. Get yourself out if you're not built for this. Okay? I'm on the record telling you that. Now, for those of you that are saying, you know something, Richard, hey, I get the risk reward thing. I'm gonna stay in this thing because I got a 5-year window. I got a 10-year window. I understand there are going to be fluctuations, but I believe this gives me the best opportunity to to increase my net worth. I'm not going to put all my eggs in one basket. I'm going to keep some money on the sideline. I'm going to keep it in my CDs. I'm going to keep some money in the money market. I'm going to keep my emergency fund. I'm not going all in, but I got a certain amount of money right here that I'm okay with taking more risks to get more reward. Those people, 18 to 80, if you're interested in that, get down to the description box, click on the Moomoo link, open up your new Moomoo account today. They're going to give you 5 free stocks when you put $100 in your new brokerage account. They're going to give you 15 free stocks when you put $1,000 in your brokerage account. But you got to do all of that right away when you open the account. It's a limited time offer. That's the brokerage app that I use, that I'm going to be using for the next 10 years to quadruple my net worth. I'm not going to worry about what these guys say about the stock market crashing. I've been through this, man. Too many times. Too many times I've been through this. So I don't worry about what they talk about because they're probably betting against the stock market, in my opinion. That's just my opinion. It may not be true, but when I hear people, all this old crazy stuff, when you know doggone well the stock market done came back every time stronger, bigger, and faster after every crash, but you want to sit right here and talk about, it ain't never been nothing since 1929. I mean, come on, man. That's just betting against the stock market. It's propaganda. But hey, that's my opinion. You can disagree all you want. I've been in this thing for 30 years, so I'm staying in. If you understand the risk versus reward and you're okay with that and you want to put a small amount of money, not your whole nest egg, a little bit of money to multiply it, and get down to that description box, click on that Moo link, open it up today, go get that free stock, go get that free money, and then send me an email through my website saying, Richard, hey, I understand the risk. I'm not putting all my money in this thing. I understand there may be a correction. There may not be a correction. We don't know. Nobody got no crystal ball. But I want to take a certain amount of money and see if I can multiply it through paper assets. I'm okay with that. Then I'm going to send you the tutorial videos for Moo so you can learn how to use the app. Then I'm going to send you the videos where I walk you through step by step what I'm buying. Remember, the key for me is buying big boy, blue chip, historically proven stocks, ETFs that multiply money. That's all I invest in. It's got to be historically proven. It can't be some little penny stock running around here. It got to be a big boy blue chip with like the Mag 7. See, that's historical track record, guys. Look at all those companies. They can say what they want to say about the tech. Them companies been around for years, killing it. All of them. All of them. And guys, you know doggone well you can't stop the progress. We can't stop the technological progress of this world. You can't stop that. Oh, golly, tech is too heavy. Well, we got to put, no, you can't stop progress, man. I don't care what these guys say. You can't stop progress. Facebook got 2.5 billion people on their platform. You think they don't want the latest and the greatest technology to continue growing that? Come on, guys. This is just... Listen, if you're interested in that, get down to the description box and click on that Moo link, like I said, and then send me the email through the website, www.richardfain.net, second link down in the description box. Send me that. Let me know that you're ready to get going, and I'm going to send you those videos so you can learn how to use that Moo Brokerage app, and then you locked and loaded, and then you're ready to buy some assets, right? You can copy my plan, or you can create your own plan. Now, if you want to be around other people that are doing that same thing, you can join the mentorship club. That's through the website too. You'll see a membership button or a join button. Join the paid mentorship club and get yourself around people who understand this concept that I just walked you through. Yes, there are corrections in the stock market. Yes, there'll be red days. But we also understand it ain't going to be forever. Like some of these people trying to paint like, oh my God, it's forever. No, it's not. No, it's not. But again, if you're not built for that and you don't want to go through that financial heartache, then don't get out. Sell it all and get your money and put it in the bank, put it in the CD, put it in a U.S. Treasury bond where it's protected and guaranteed. Ain't no guarantees over here in the stock market now. So you know that. No guarantees. All the guarantees are over there in your money market account at your bank and your CDs at your bank and the U.S. Treasury bonds. Those where your guarantees are. Ain't no guarantees over here when you're putting your money in the video. Ain't no guarantees in S&P 500. Ain't no guarantees in FTEC. Ain't no guarantees in Broadcom. Ain't no guarantees in Chipotle, Visa, Walmart. Ain't no guarantees. But history tells me they've made a lot of millionaires. All of those companies I just mentioned have made a lot of millionaires. How they do that if it ain't no upside in them? How do they do that? How does NVIDIA create regular folk, 34 billionaires? How does NVIDIA create 34 billionaires if ain't no upside? They've created 34 regular billionaires, regular smugglers. 34, but ain't no upside. So guys, thank y'all. Appreciate y'all, man. I got to get out of here because I got to go to a meeting. But thank y'all for rocking with me, man. Like I said, get down there, hit those links, get yourself signed up. I may be back tonight, I may not be, but hey, man, appreciate y'all. Appreciate y'all. Y'all keep chasing your greatness. Keep building wealth. Keep building wealth some kind of way, right? If the stock market ain't right for you, find somewhere else to build a wealth. Maybe a business, maybe real estate, but find something to build wealth, okay? Find something to build wealth. Appreciate y'all, man. Lock it in with a thumbs up before you get out of here. Thoughts become things. If you could see it in your mind, You can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy. I'm going to catch you guys on the next one. Peace.